A very good afternoon, everyone. Welcome to uLaw CPD webinar. Once again, apologize for the delayed start as we were waiting for more folks to join in. And since it's a CPD, we just thought we could give them all some time to join in. However, the session's being recorded and everybody will get to see it once it's uploaded on our YouTube channel. As you all can see here right in front of you on the screen, the topic for today's session, to please make a note and to get your appropriate Law Society credits. And we offer professionalism CPD credits. So this webinar is entitled for 1 hour of professionalism CPD credit. Law Office Expense Management. We're going to be discussing about managing client and business expenses. More of office expenses, less of client expenses as such, since we have a different topic to focus on client expenses on disbursement management. However, we're going to touch base upon disbursements management over here and then move on to office expenses as well. As every other webinar, we do have a set agenda here. We're going to be discussing key differences, key points about difference between disbursement and an office expense. What are these two different types of expenses? How do you manage them? And what are different types of disbursements? And how do you record them? And what are the business expenses? How do you manage them? How do you record them? How do you, and in disbursements as well, how do you recover the disbursements? How do you record them as, how do you report them as an expense too? And what are different types of documents that can be generated to maintain the books, to make sure all the expenses are being recorded from time to time? And what are these different documents? What is an expense book, and does general disbursements also cover these expenses, and etc. We're going to be seeing all of these as part of today's webinar. And of course, analytics, a little bit of analytics on expense management to better manage expenses, to control expenses, and understand where most of your like a little pie diagram or chart to understand where most of your spendings are being allocated. So we're going to see the allocations as well today as part of analytics. This is predominantly what we're going to be discussing as part of today's agenda. And starting off with disbursements. Yes, we purposefully chose this webinar today to match with the previous week disbursement in Demystified. So disbursement talks about basically any expense incurred on behalf of your client by your law office is known as disbursements. And when you incur a disbursement on behalf of your client, it is assumed and it is also laid out in your retainer agreement or any other engagement contract that they will be paying you or reimbursing you for any expense that you've incurred on behalf of them from your law office. Very important to maintain books, receipts, to keep track of the expense that you have incurred on behalf of them. That being said, disbursement includes the recovery of expenses. So your accounting there is one step more, as you have to recover from your client to pay yourself if you have paid on behalf of them. Now, coming into office expenses. Office expenses are any expenses that you have incurred on behalf, on behalf of running your firm. So while disbursement is on behalf of your client, over here for running your firm, to keep your lights on in your firm and to ensure that you have paid the rent, you're able to run your firm, and for which there are some associated costs involved, and that is known as office expenses. So expenses can be of any nature, could be, for a capital nature, could be on an overhead basis, like, for running your day-to-day firm. But still, for you to arrive at the right profit, you will have to record your expenses into books of accounts. So you know how much you have earned and you know how much you've spent while you're arriving at a proper P&L. So you know exactly your firm's health only when you record expenses. So recording income alone doesn't count for revenue, right? So only when you record expenses, you know what is the actual profit or loss that was incurred in the firm the following year or in the current year or previous year, etc. Now, when you take a difference between disbursement and business expense, so obviously disbursement, something that you have paid on behalf of the client, which is recoverable. So there's a recovery involved here, as I already mentioned, but you get to recover it only upon raising an invoice. So when you raise an invoice for getting paid, that is when you get paid for the disbursement too. Like, sometimes people raise legal fee plus disbursements together in an invoice. Sometimes they raise both separate. Sometimes the disbursement alone, when raised, you get paid and then you can pay yourself. So in order to get paid for the disbursement, you will need to record the expense and report the payment, raise an invoice, get paid, so you can get paid too. And what is the necessary that if you don't track disbursement, what happens? You don't know how much exactly you're paid for, so the report expense portion becomes difficult. You are not able to arrive at how much was paid and how it was paid. And what happens if you don't track all these office expenses? You cannot obviously calculate your HST, GST, how much it's an inflated HST, right? If you don't record the expense, if you don't record HST paid on the expense, you don't know your exact profit margin and returns as mentioned. So make sure that you record all of these from day-to-day basis. And when you come into managing the disbursement, some key points to remember here is that when you record a disbursement, make sure that you know who paid for it, how it was paid, what was the reason, so the description and other things. Most importantly here is to record the disbursement under a client's name and matter. Than, recording it outside. When you record it outside, it's mostly not allocated to a client. It's probably allocated to the business. So if it is paid from general, then make sure to decide how much you're charging your client and how much you've paid, like invoice, recover the expense from the client, and then pay yourself by transferring that money into your account. So there are a few steps involved when it comes to disbursement. And of course, when you pay out of trust, it's a little simpler, but there are some things to keep in mind. Over here, you can pay only for filing fee or any other fee, and not have any disbursements with marked up value. So you just have to remember that you're using your client's money. So you have to make sure that end of the day, this will only help you reduce the amount of bookkeeping, but at the same time, you will have to make sure to keep everything clean here. While on the other hand, when you're paying out of general account, it is assumed that you're using your money upfront, and then you're recovering it from your client by making a invoice. And when you make the invoice, you very clearly say how much is this disbursement, how much are you charging your client, and how much are you recovering from the client, whether there's a little marked up portion involved, because it's a general account, so you're free to invoice accordingly. And once the disbursement is recorded and the invoice is raised, how do you plan to collect the payment? Is the payment going to be transferred from trust to the general, or is the client going to be paying you into the general directly? And if this payment is made from general account, well and good. If it is made by you, like your own pocket, then you have to further transfer that money to yourself or to whomsoever was paid. That's in regards to recording a disbursement. Now, when can you recover a disbursement, which we already spoke about briefly, is only after you raise an invoice. And to raise an invoice, you need to have an appropriate date, appropriate amount that you're charging your client, how much do you want to invoice them, how much was paid. So is there a markup or markdown involved here? Taxes portion, raise your invoice. Once the invoice is raised, like I already mentioned, either you transfer the money from trust to the general or get directly paid into the general. Plus, if it's your own money, you move the money from general to your personal bank. Now, that's how you get paid for the disbursement. Now, in terms of what are the different types of disbursements? Now, the types of disbursements belong to billable, unit rate, mileage, travel, and few of the recovery of expenses from actuals and other things. That includes outsourced and third-party consultancy. Now, how do you bifurcate them between what can be paid from trust and what can be paid from general? Now, whatever can be paid from trust obviously has to have no markup value. There's no profit margin and no travel time, no mileages, unit rate. So putting it this way, from trust, you can do both billable and recovery of expenses on actuals and outsource consultancy on actuals. And from general, you can do anything. You can do all, in fact, all of it, billable, unit rate, travel time, etc. So to remember this way, only general, like mileages, anything with profit margin, travel time, all of these can go only out of your general account. So this is what has been said on Law Society guidelines. So you can definitely look up on the website for more additions and understanding it better. So that will help you to record disbursements and expenses associated to your practice in a better manner. Over here, as you report disbursements, what are some documents that record it or that shows it? Definitely client's trust ledgers, the two ledgers, the journals, that includes the disbursement journals, and the fee book. So that makes it about 6 documents, where the fee book has more appropriate billing portion shown with the taxes exempted or taxes included and all. Over here, you also have following samples that shows you how the ledgers and journals looks like. Comes up with all the particulars, running balances, including HST, not including HST. And the disbursement journal shows all the other particulars, including who it was paid to and etc. As you progress into the webinar, the first portion of it was disbursements and the second portion of it being office expenses. Let's talk about office expenses and how you record it and how you address it. Now, in general, office expense is mostly for paying out of your bank account to cover any expenses to run the office, basically rent and other expenses that you will incur on behalf of your firm for running your firm, for running your overall business. So you need to record it into the books of accounts, saying office expenses, manage the taxes appropriately, and also how much you've spent on and whatever different types of accounts that you've worked on, everything to be recorded appropriately. And as you progress and you'll know what are the different types of expenses, if you need to create some accounts for them so that you can manage them better, you can record these into the respective subledgers and then maintain the books more streamlined. That's the accurate word that I would use. And office management expenses includes not just your law society fee or bills and stationery. It includes more like, your marketing, your advertisements, promotions, even some books that you've purchased or everything that includes. So these needs to be definitely entered into the respective books of accounts with the in alignment to respective subledgers, and all these rent and maintenance to be entered, as well as corporate taxes if you're paying taxes for your firm, and bank charges. Sometimes the ones that we miss or tend to miss are bank charges, salary that you pay yourself, or you pay your assistants or your office workers, expenses basically that includes borrowings like interest and other things. So these are few expenses that each and every firm could incur, and to understand better, it depends on each and every firm's area of practice, what includes. It varies definitely, and you have to make sure to run over your practice and understand what are your monthly expenses. As you understand the nature of your expenses that are recurring, you start making subledgers appropriately and start capturing those information with appropriate date, amount, title, particulars, method of payment, how it was paid for, and record them individually, sometimes with batch imports, like you can import a bank statement, you can then connect a bank. There are different methods in the software today that enables you or that allows you to take action at one go and record all of these expenses without consuming too much time, I would say. And at the same time, with more data accuracy, as they are connected through your bank. So most of the data is interlinked, like date, amount, particulars, reference numbers. So all that you have to literally do is take action and post it to that respective subledgers, whether it was a salary, whether it was a associate payment, whether it was a law society membership fee, whether it was rent or stationery, whatever. So it says there will be need for you to take action, but the interference over here will be much lesser than what you think. And as you go in, there are something called as, documents that can generate to show all these expenses that you have recorded, starting off with the expense book and HST, GST, PST payable statements, expense statement, P&L, borrowing report. All these, as you can see, shows you if it is a client expense, who was the client, what was the file, what was the expense description, everything noted in. And if it was something to do with, an office expense, what is the subledger it has been recorded to, and what was there before taxes, what was after taxes, everything entered in there. Okay. As you progress, you can see here at the bottom and the screenshots that show how the reports looks like when they are generated from our program. Yeah. So now moving on to legal accounting software. How does this work on a legal accounting software? What really happens when you record events as in when they happen? When you record financial statements, when you record financial transactions into the software, what really happens? What happens as you progress into the software? So, as you get to record these events as and when they happen, you get to also see the financial records and bank records closely matching to each other, making your reconciliation much simpler. As you know that, these are the documents that allows your software to do the work. And rather, the software produces these documents while you enter the data, and all the above documents are produced within no time. But for which you have to be making sure of an accurate data entry alongside with compliance is being followed and ensuring all the analytics are revised, making sure you have entered in the appropriate data so you can see the analytics outcome matching appropriate to your financials. And definitely a software is going to make your life much simpler with ease of use from anywhere at any time. And most important of all is to keep track of both your expense and income, allowing you to reconcile your books pretty easily. All right, so speaking of which, I'm going to walk you all through how the office expense and disbursement looks on our program. I think we've already seen how disbursement works on our program, but I'm going to also again show you all a little bit of disbursements and then walk you through how the office expenses look. Now, disbursements, as I already mentioned, are from client matter based. So you go into the respective client and you go into the disbursements tab, and then you add disbursements from there. Now, when you can also do this from outside the matter by clicking on accounts. Either you import a bank statement or you batch import by connecting to the bank. For some reason, my banks are not getting connected. Just give me one moment. Okay, let me reload to see if it works. And in the meantime, if you all have any questions or have any, want me to discuss anything further, I request you to put it on the chat window so I can walk you all through on our uLaw platform. Right. Okay. So we are into accounts, and when we are recording a disbursement, which can be done under the matter, under disbursements tab, like I already mentioned, add new disbursement, and you go by either paid from trust or paid from general. This is the most preferable option because there is no way you can make an error as you're directly into the client matter and you work from there. I mean, when you're in accounts, the only thing that you have to be little careful about is which client you are putting it under, right? So when you click on import bank statement, I'm hoping my bank connect works. Unfortunately not. I just tried right before we joined and I need to check if there's anything error with my system. But then let me put it this way. So if you're importing it from here, you have to just make sure that you're putting it into the right client and right matter. It'll ask you which client and which matter, and you just have to search and open it under that particular client and matter. Now, which can be done when which can be avoided when you do it from the matters. So right over here is when you click on accounts and matters, right, respectively. So right now we are in the matters. When you click on add new disbursement, paid from trust, if there is money sitting in your trust account, all that you have to do is simply pay out from trust. For example, let me see if I have some money in here. Since I don't have, I'm just putting in some money into my trust account. Save. So now you have some money in the trust, which you could use towards a disbursement. So you're trying to add a new disbursement, directly withdrawn from trust, pay it out of trust. There are only a few types of disbursements that you can use your trust account for, like we already discussed. Anything that are government fee or any application fee, any fee related items that does not have a markup value. So you're directly paying it to the government or to the court or to any other processor or anything like that. So, okay, so you enter the details. So you can do, sorry, I didn't enter the amount. So you're paying 200 directly from here. Give me a second. For some reason, this is not working out, probably because the other, oh, my bad. So this client has two files. I think it's gotten into the money is gotten into the other file. My bad. So I'm going to add a disbursement from here saying that I spent $200 towards an application filing fee. There was a check. Here's a check number. You can also print a check from the program. Click on payments. So now I have made the disbursement right from here. So over here, we can also click on add new disbursement. Let's say I have a disbursement to be made from general. You can click on pay disbursement from general. If it's from general, you can have a markup value. So let's say you had a printing and this is what you're charging them. You incurred nothing. It's 100% markup for you because you're not reporting any expense. You can leave the bottom portion empty. You're not worried about it. Now there's another type of disbursement that includes markup with actuals, with mileages or billables. So this is an actual, but again, whatever you've spent actually, right? So you go by unit rate. So let's say you this time charged your client for photocopies and for 20 pages. Then you charge them. And did you spend for it? Yes, you spent. You report the expense. Paid to maybe UPS store. How did you use? You used a debit card. Right. So we also have mileages, which is rates. Similarly for mileages. Now, the other thing that we saw was third-party consultancy. Now here, this could include, let's say, I'm doing for a translator fee. Let's say you're charging your client 250 plus taxes. However, you paid them 150 plus taxes. So there's a marked up portion that is on the top, which is you're charging them, and the bottom what you spent. So since it's a profit margin involved, you use the general account for the same and click on save. As you progress in, when you click on invoice, click on complete. You say only disbursements for today's date. Click on invoice. Okay. On download. While that's getting downloaded, just FYI, you click on question mark. Tells you clearly how much you can transfer from trust to the general because your money of 500 is in the trust, out of which 200 was already paid out of trust for disbursement on application fee, and the rest of it of 327.5070 can be transferred from trust to the general simply by clicking on transfer. Shows you all the disbursements that you can transfer for. Wait for it to finish loading. And transfer money from trust to the general so you can pay yourself. And when you go back into accounts, just to see how the compliance looks for general disbursement journal, and just download one. Whatever that was paid out of general will be shown here. Right, comes with all the description, method of payment, expenses, and total. Expense before taxes and expense after taxes. If it's tax inclusive, of course. The second one, as you say, POA for filing fees, we did have a taxes attached, so you can see that it's tax exempt. Also shows all the method of payment and how it was paid and who was paid to, etc. As we progress in to the office expenses part, you can do the office expenses by clicking on add expense payment, but it's important to make sure that all the required subledgers are already created, like you add new accounts for, your recurring expenses every month. So to maintain your recurring expenses every month, you ensure to add all these new accounts. Some of them are default created in uLaw. Some of them are created by you. So as you see, I created a few myself, like phone and internet bill, travel expenses, my membership fee, subscriptions, etc., etc. I create each and every account as I need. So, as I progress into the office expenses page, I know how much each of the expenses are being allocated for. Like, I know what was the portion that was allocated to rent, what was the portion that was allocated towards renting, towards, other utilities as well. So now let's say rent for Jan 2025. Put it under the respective tab. Was paid. Sorry. Okay, so going back in, we have an ABC Realty Inc. entered in here. Enter money order. And we also have, or choose the method of payment. Maybe you gave a check, you gave a bank draft, choose the method of payment, then print a check. So you can also print a check from the program that allows you to save expense, report them, and also print check. So keeping it more professional looking and making it look more professional in terms of your office expenses. You can just keep a copy in your file and, also keep a folio to yourself for your records. Now, as you progress in, you would see that there's another option where you can add import bank statement, which is what I was initially talking about. I'm going to try connecting my bank once again. I'm going to quickly stop sharing my screen. So, I really want to show you all how this one looks. So just give me a moment so I can see how everything works here. At least if I could show you all the minimum as to branch import with a bank connect will be great. Okay, that was successful. For some reason, it didn't get connected earlier. So now I have my banks connected. So the purpose behind getting your banks connected, as I already mentioned, is to batch import transactions and to keep it more faster in terms of data entry stuff. So you see here now, I have a few transactions in my general account for the current month. So all that I have to do is, I know Uber, okay, I was my office expense, and then it goes under travel. So I just quickly check the subledgers. I didn't like the description here. I would just post it into my reference number. Was paid using my debit card, was to Uber. So I just, rework on the description portion. Okay, and submit. And then I move on to the next one. So I keep progressing as I move on, keep moving on to the expenses portion. And as I finish, I just have to reconcile that month's expenses. Okay. And you can also look at the bank statement from here to verify all your expenses into that particular month. So when you now download a bit of compliance, so we've done a few transactions here, right? Like a trust disbursement, a general disbursement, one with marked up, one with mileages, and then office expense. So when you click on, for disbursements, always rely on the client's trust, general ledgers, and then the journals. Then for the office expenses portion, my favorite is expense book. So when you download expense book, you will see today what all was the expense that was made out of your bank account and that was entered into the bank. over here. Just getting in here. Give me 1 second. I'd like to show you all how the expense book looks. And as we progress, and we also have general disbursement journal and other journals. Okay, so go back into uLaw, click on compliance, and you just downloaded the expense book. So the one that I just downloaded here. Okay. Yeah, there you go. All the expenses, including taxes, excluding taxes, with the appropriate description, just posted to a client or a business expense, both will be shown. The other one that will show here is compliance. The general disbursement journal also shows all the disbursements that we made today. It won't show exactly, it will show you both the general disbursements that were made. It won't show you the trust disbursements. Just give it a moment. My Adobe has some problem. Just give me 1 moment, please. Okay, I hope it opens up. Let's try once again. Okay, there you go. So the disbursement journal shows all the disbursements that were made today. Only the disbursements, okay? This is not office expenses. So if the difference between an expense book and the disbursement journal is that the expense book shows you all the expenses that were incurred on behalf of the client as well as your business. Whereas your disbursement journal shows only the disbursements that were incurred on behalf of your client. Doesn't show you the office expenses, even though you had more going out of your general account. Now, the other one that I would highly recommend for assessing your fee and everything is a fee book. So when you click on fee book and download the fee book for this respective period. I'm doing it with all today's days so that you can all relate to what we've done today. So the fee book shows exactly what was the fee raised with the disbursement portion. So again, you get to see how much was it, the disbursement, was taxable, before taxes, after taxes, total. So you can verify this with the other documents too. All right. So this is in turn going to help you to reconcile your books along with your trust in general. And if you have further, doubts in terms of your data entry, you can always take a look at preview and make sure that everything is good when you're, maybe you can try doing a weekly reconciliation to see if you've added in all your bank fee and stuff like that. So very simple thing here to do is that you go by your bank. You choose the particular month that you're working on, and then you enter the balances as per the bank statement, and then you start clearing the transactions that you see on the bank statement. If you don't see any transaction in the program, it means that you have missed to enter something, some data. So that's when a bank connect happens, there's going to be so much data accuracy that all this missing out on data doesn't happen. So you will tend to enter as much as information as possible with the Bank Connect feature. While even you enter it on your own, there can be a couple of things that you could have missed. Sometimes you won't remember bank charges, especially the ones that are pre-authorized debits, right? At least sometimes when you make your own payments, you know that, okay, I made a payment towards a particular file. I made a payment towards a particular expense. I know I have to go and record it today. But there are some that you would have pre-authorized to be debited from your account. And those are the things that you could easily forget on a monthly basis. So when your bank is connected, you tend to not miss out on those particular expenses. Now, that's about the Bank Connect importance that I would share here. And yeah, reconciliation falls into the picture right after your month is completed with all the expenses, adding all the expenses and incomes. You go by the bank statements, make sure all the expenses, incomes, debits, credits, everything has been added, and then you will be able to add in all the information appropriately and reconcile the books. Yes, that's probably it that I wanted to share for today's webinar. I know few of you have some questions. I'm yet to check out the chat window. So just give me a couple minutes and I will start looking into the chat window. In the meantime, I'll also share links for you to give your attendance and note down the topic for today's session. I'm going to just turn off the recording so it'll be helpful for all of you to understand how everything works if we go and start doing things on our own. I'll probably start sharing the screen again and all your questions can be taken off the recording. And you allow me a moment to share the link. I'm sharing the link here on the chat window. Please use the topic for today's session is Law Office Expense Management. It's entitled to 1 hour of professionalism CPD credits. Kindly provide your attendance. Yeah, this recording will be available on our YouTube channel probably by the weekend or early next week. Any other questions? I see how many CPD hours do we get for today's webinar. It's 1 hour of professionalism CPD credits. I've entered here below. Once again, thank you all for joining today's webinar. This video recording will be available next couple of days. And if you have any questions, please reach out to us on the email ID that I'll be entering on the chat window. Thank you and have a wonderful day.